So this is exercise 712, and you're going to want to have your book open to exercise 712, and then you also may want to print out the notes that I have that go along with this, just so in case you can't see what I'm writing up here. Basically, exercise 712 is a fairly straightforward bank rec, and once you have the template set up, you can go by what's given in the problem and sort of fill in the blanks. So if you start looking at the problem, the first thing that it tells you is a lot of information about the cash account ledger at the Mint & Company. One thing that AC 102 is doing that's different from AC 101 is now they're going to start giving you more information that you need. So it's kind of like you're at a desk working in a real office and you have to rummage around to see what information you really need. So if you're looking at this problem, if you're looking at the book, it tells you the balance September 1st. Well, we don't need that. We're doing the bank rec for the 30th. It tells you how much was deposited, how much was written. Well, that's nice, but we don't need that either. But then it does give you balance September 30th, 17,404. Oh, okay, so we can put this in. That's the balance per books, 17,404. The next bit of information we see, it says the September bank balance shows 16,422. Okay, 16,422. So we have this template. We can kind of fill it out as we go through the problem. It says the September bank statement, it gives us the balance, and then it said these were things that were shown on the bank statement. They collected $2,500 note plus interest. Well, the books don't know about that. That came directly from the bank. So we could say we're going to have to add to our balance the collection of the note receivable by the bank for the 2530. So we're going to be adding 2530. That'll be a plus. And then they also mentioned that there was some interest on the checking account of 45. And I actually like to separate these out. I'm sorry to do this, but I'm not going to start over again. Interest on the note receivable. I like to go, it was the note receivable itself gets reduced 2,500, and then we had interest revenue on it of 30. Okay, so when we go to do the journal entries, it'll be nice to have them broken out. Other items, an NSF check from Richard Nance. So we know that we thought we had the money there, we don't, so we're going to have to add back, well, we would just say we have an NSF check. We know we've got to deduct that from our balance, from our friend Nance, and that was for $425, so that's going to be a deduction. Then there was also the safe deposit rental, so safe deposit rent, and this was deducted directly from our account. We have to tell the bank about that. I mean, we have to tell the company books about that. And then, as of September 30th, deposits in transit were $54.50. Well, these are things that the books know about. They've been deducted from our checkbook balance, but not from the bank balance. So, because they haven't cleared through the system yet. So we're going to add deposits in transit here. And they give us that number of $54.50, so we're going to go plus $54.50. And then we're going to deduct the checks outstanding. And these are the checks that we've written, and so they've been deducted from our checking account, but they have not yet cleared through the banking system, so the bank doesn't know about them. So that's $23.83 that we will deduct. Now, our goal in life is to have the adjusted balances equal one another. So now I'm just going to check and make sure that, let's see, we added, so if we go this beginning balance plus the $54.50 minus the $23.83, we should get an adjusted balance of $19,489. Okay? So that's what we hope the other side comes out to. So when we add the the balance of 17,404 plus the loan that was collected plus the 2 interests less these, we do get 19,489. Okay, so now we're not done yet though. We have to do the journal entries because this number is what our balance shows on the books right now, and this is what it really is. That's the adjusted balance. So we're going to do a couple of journal entries, and the way I do them is I do one to increase the cash. We're going to have to make a journal entry for all of the adjustments we've made. So I do one for this, and I do one for deductions. That's just the way I do it. You can do them however they make more sense to you. Wiley does them differently. Okay, so what are we going to do? We're going to say we know that we increased cash by 25 plus these two, so that's 2575. So this is at 930, and we know we would have debited cash. We have to debit cash for 2575. And then we can't just use collection and note receivable. That's not an account. We would credit the account note receivable, okay, for the 2500. And then I'm going to group those two together as interest revenue, okay, and that would be 475. It's mostly because I'm running out of board. Okay, so then with the other journal entry we would do would be to decrease the cash, and we have to tell them that we had to add back the account to our accounts receivable for that non-sufficient funds check. We thought we had that money, but our customer's check bounced, so we don't really have it. So we have to add back that to our accounts receivable for 425. The safe deposit we could call miscellaneous expense. Yeah, this is where having my notes is handy, because obviously this is all written on my notes. 65. And then we would, almost made it here, we would credit cash for 490. So those are our two journal entries. And then what you want to do, just to convince yourself we've done the right thing, is if you think about the cash ledger account, you know, and if you remember we have our debits and our credits and our balance. Our balance was 17,404. And when we post these two journal entries, we will post at 9, oh my goodness, what a mess. We will post at 9:30, 2575 as a debit. Okay, see from right here. And then we will post a credit of 490, also on 9:30 as a result of these adjusting entries. And so we would end up with 19,489, which is our goal in life. Okay, so that's a fairly straightforward one. The next two will get a little bit more into the real world.